Now, let's talk about if this rotation rolls, if this rotation we're seeing play out here from a lot of these larger companies into the smaller companies, which stocks are going to be absolute game changers that are going to go up 50%, 100%, 200%, 300%, 500% over this next bit of time, right? What are those sorts of companies? And keep in mind, some of these sorts of companies I'm about to take you through, they roll a lot more heavy and a lot faster than a lot of those big companies I just rolled you through, because a lot of those other companies I was showing you, a lot of those market caps are tens of billions or even hundreds of billions of dollars or even $1 trillion plus, right? It takes a lot more to get those stocks rolling. Some of these ones we're about to go through, doesn't take a lot of money for them to start flying, absolutely flying, okay? RVLV, Revolve stock's a perfect example. This stock is already up 17.5% in the last 5 days. If this rotation continues over the next several months, Revolve is going to skyrocket in that situation. Look at that move here today, 11% up. And keep in mind, when it comes to these stocks I'm about to show you, they've had relentless selling on them for 3 years. So there's not a lot of people left to sell these stocks. Like if people wanted to sell these stocks, they got out of these stocks over the last 3 years. So now these stocks are set up in this ultra situation where if money starts to really funnel into these stocks, you're going to see ridiculous moves, like seeing Revolve today up 11%. That's ridiculous. They didn't come out with earnings. There was no big news in regards to Revolve. It was just another day in the stock market, and Revolve was up 11%. Just because that's where money's rotating, right? Incredible. Remember, people hope to make 7 to 8% in the S&P 500 a year, and this stock's 11% in a day. In a day, right? Now, the fascinating thing with a lot of these stocks is you got to understand where these stocks were 3 years ago. And so that's why I'm pulling up 3-year charts to kind of show you before we got crazy inflation that has sliced and diced everybody for 3 years, right? Before we got the crazy rate hike cycle that took Fed funds rate to the highest it's been at in 20 plus years, right? Before we had all that, where were these stocks at? Revolve was in like the $70 range, right? And today it's $18. $18. So let's imagine the Fed chills out over the next year or two. Let's imagine inflation is not a problem for the next year or two. Where do you think Revolve's going to in that sort of situation, right? Look at somebody like a Fubo. Fubo's made a move of 16+% in just the past 5 days, 7.5% here today. If you see this rotation, stocks like Fubo are going to absolutely moon, right? Keep in mind, where was this stock at 3 years ago? It was 17x where it's at now. So if Fubo was to make a move just to where it was 3 years ago, which, by the way, the financials are in a massively better place for Fubo now versus 3 years ago. The revenue, the bottom line, the amount of customers, everything basically for this company. And so if this stock went to where it used to be 3 years ago, it would be a 17x return. 1,700%. Let that sink in for a moment, right? Look at somebody like a SoFi. SoFi stock is absolutely animal right now. It's up almost 21% in the past 5 trading days, up 5.7% here today alone, right? I mean, look at that, almost 21% gain in 5 trading days. And there's no big earth-shaking move in regards to SoFi, right? But think about where this company was prior to the massive rate hike cycle and prior to massive inflation, right? 3 years ago, this stock was around $16 or so, right? Which is around a 2x from where the stock is right now. And keep in mind, the business is in 1,000 times better place than where the business was at that particular time. Back then, 3 years ago, SoFi was a huge money-losing company that didn't have a ton of customers, that didn't have the revenues even remotely close to where those revenues are at here today, didn't have the AUM even remotely close to where it is today, right? Hadn't been proven to be able to get through something like what has been thrown at this company over the past few years, right? And you know, we got a 2x just to get back to where it used to be. Like, you want to talk about a stock that has some big upside. I don't think there's not a bank out there that exists that I've ever seen that has bigger upside potential than SoFi. It by far has the biggest upside potential. You look at somebody like an Honest, right? You know, this could be seen as another sleepy company. They sell beauty-related products. They sell diapers and wipes and all those sorts of things, right? And, I mean, you look at this stock, it just in the past 5 trading days is up 18%. If this rotation continues to roll, you'll see Honest at $10 plus fast. You'll see Honest $10 plus this year. If this rotation continues to roll, and Carla continues to execute on this business the way she's been doing, and that net income starts to fly up in the remainder of this year, you'll see Honest hit a 10 this year. That's a crazy thing to take into account when it comes to a stock like this, right? Now, if the rotation just stalls out, or if Carla, mismanages the company, that's a whole different ballgame. But as long as the rotation that we're seeing continues to play out, and Carla continues to run this company the way she's been running it, which is absolutely phenomenal, you'll see the stock go to like 10 this year. This year, right? Now, keep in mind where the stock was 3 years ago. It was a $14 plus stock, right? Which is about a 4x from where the stock is right now. And keep in mind, Honest is on the most stable footing it's ever been on as a public company. If you look at any time period since this company went public, and you look at where their revenues are at, their bottom line's at, where their margins are at, where everything's trending in regards to the business model, where the management team's at, this is by far the most stable footing the company's ever had. Yet the stock's $3 a share, right? No one's wanted to own these sorts of stocks the last few years. And these stocks had nothing but relentless selling pressure. I mean, look at that. Like everybody that wanted to sell Honest stock sold Honest stock from $14 all the way down to $1. It's incredible, right? Now, completely random. I saw this. This is so random. So I heard rumors that they were building a QT here. And if you know my history, I used to, be a manager at QT back in the day, right? I left the company actually a decade ago, 10 years ago, right? And I heard they were building a QT in Vegas, the first one ever. So we drove out there to go see it. And sure enough, they're building it actually on this piece of land. And I'm like, that's really exciting. But then my wife said, had the maps up. She said, there's an Honest warehouse over here. I said, what? Honest warehouse? And sure enough, there was an actual Honest warehouse out there, which is, I think it only looks a few years old in regards to Honest Warehouse. Looks like they've been using it for the past few years. Actually has reviews on it as well. And I had no clue they even had a distribution facility, a warehouse out there, right? And the one thing I'll say about it, though, you would never know it's an Honest Warehouse because they don't have any branding. It's right on the highway, too, right on the 15 there. They got to get branding going on this baby, man. They need branding. This facility's massive, by the way. It's a 571,000 square foot distribution center. I mean, absolutely massive. And so Honest has been using this the past few years, and really good to see. I love seeing stuff like that. But man, they need branding. That building had like no Honest branding almost anywhere on it. I'm like, dude, you're right on the highway. Like, it's free advertising, basically. Put Honest branding all over it. If you ever go by Amazon warehouse, there's no confusion. It's an Amazon warehouse. There's Amazon branding all over it, right? You ever go by like a Walmart warehouse, there's no confusing it. It basically looks like a gigantic Walmart store, just without any windows, which honestly Walmarts don't have many windows anyway, so maybe it is just basically a giant Walmart store, right? But like Honest needs to get on that branding game on their warehouse there in North Las Vegas. I'm like, get on that, baby. You look at a stock like the Planet, right? These stocks are a little more late stage rally, so the more you have smalls roll. So the way I'll put it to you like this. At first, you're going to have more quality small caps roll, right? Do very, very well. And as the more quality small caps roll, you'll have what is seen as less quality. Now, that doesn't mean the Planet's a less quality company. I'm just saying like it's viewed as that for now, right? Doesn't mean like it'll be that for 5 years or 10 years in the future, but that's the way it's viewed now. So as more and more small caps roll, then you get even a broadening inside the smaller cap companies. And then you get some of the more micro cap companies start to roll as well, right? And so if we continue to see, let's say over the next month or two, stocks like the Honest, Revolve, SoFi, those are seen as more quality type small caps. If you see some of those continue to roll, right, the next up will be some of the more micro names, which would definitely be something like the Planet, right? The Planet's been a stock that's obviously been devastated. It's started to trend up a little bit, but in terms of the big move, that's a little later stage in the rally. It's a 48-cent stock. I mean, to get back to where the stock was 3 years ago, it's a 15x. 15x from here. That's a wild one, right? Wild. But yeah, in terms of there's a broadening in the market first, and then you get a broadening inside the small caps after that, right? You look at something like Avant Brands. I mean, look at Avant. Avant, if we go back 3 years ago, it's basically a 10x from here, right? A 10x. But those sorts of stocks, those like MJ-related companies, right? They have their time to shine, but it's a little further on in the kind of rally cycle here, right? Now, there's a lot of opportunities out there, but you might say, okay, well, what if these stocks don't 5x, 10x, 15x, 20x, right? Over the next, however long this rotation lasts, whether it's another 3 months, 6 months, whether it's another year, right? Okay, let's say they don't. Let's say they only 2x. Let's say they only 3x. Let's say they don't get anywhere remotely close to where these stocks used to be. Let's say they don't 5x, 10x, 20x, right? 17x. What's wrong with a 2x? What's wrong with a 3x? What's wrong with a 4x, right? I mean, a lot of these stocks are so devastated. They're in such a devastated place, right? And now with Fed funds rate looking like it's going to start coming down, interest rates have likely peaked, these stocks finally get some buying pressure to come into them, right? And they finally get some rotation. I mean, a little bit goes a long way in regards to these stocks. And the biggest thing I always do when it comes to these sorts of stocks, I keep position sizing smaller in terms of how much money I put in. So if you look at my portfolios, you're going to find a lot of these sorts of companies might be a 1, 2, or 3% weighting in the overall portfolio. A lot of times it's closer to 1 to 2%. And the reason being is a little bit goes a long way in regards to these stocks. Because if these stocks are the 10x, 15x, 20x opportunities, I don't need to put a lot of money into them to be a game changer, right? If I've got a $2 million account, like the public account. The public account's $2 million plus, right? But let's say $2 million, okay? If I put $20,000 into one of these companies and it 10x's, right? Let's say I'm going into Honest, and Honest goes from 3 to 30, right? So I get a 10x there, and I put $20,000 into Honest, right? Which is a 1% weighting out of a $2 million portfolio. It's now a $200,000 weight in the portfolio, right? Because it went up so much. So that's what I say in regards to these more speculative stocks. People sometimes want to go so crazy with them and they want to put crazy amount of money into it. Why? You don't need to. That's just trying to be greedy, and you're putting your portfolio at too big of a risk. As long as you keep your position sizing, let's call them not crazy in regards to these stocks, you set yourself up in a really good situation. Because even if, let's say you buy 4 of these sorts of companies, right? Let's say 3 of them don't do much, okay? Maybe they go up a little bit, down a little bit, but one of them actually is at 5x, 10x, 20x opportunity. Boom. like it was a game changer. But the thing is, you can't just spread money out and not know what you're doing. You still got to know what you're doing. You still got to know how to value these companies, understand the business models, understand any moats around them, what their market opportunity is, what their market share they're going after, and all those sorts of things. If you don't understand that, then you're just kind of like gambling money out there. When I make bets on these sorts of companies, they're very educated bets that I understand where this company's business is likely to trend over the coming years and what's going to likely happen for them, right? Doesn't mean I'm always going to be right, but there's an educated guess there, which is investing at the end of the day. You're making an educated assumption on what's going to happen in the future by looking at what's happened in the past, what's going on currently, right? And what you then expect into the future, right? So that's a little food for thought in regards to that. You don't need everything to be a 20x to still do absolutely phenomenal, right? Now, if you're in the private group, I posted this yesterday. This was really helpful. It was, kind of a bunch of different stuff I wrote about valuing and growth stock. So not a lot of people understand valuing a stock, period, but especially a lot of people don't understand how to value a growth stock. And so I wrote all that. Make sure you click on that, read that through. I think that's going to be helpful to a lot of you guys. It looks like a good amount of you guys have seen that so far. So glad you guys are enjoying that, okay? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. 3-stock lunch, Goldman Sachs Super Micro Ultra Beauty. Looking forward to hearing this one.
3-stock lunch, and we'll start with...
You know I love some stock talk. Oh, yeah,
Sachs after they beat on the top and bottom lines this morning. Here with our trades, Jeff Kilberg from KKM Financial, also a CNBC contributor. Jeff, you stick with Goldman, you ride it from here?
You do. All-time highs, Kelly. I think you made a buy or hold your position because they had a phenomenal quarter. If you look, they brought in over $3 billion. And yes...
Was this man talking in a submarine? Holy smokes. How deep under the sea are you, sir?
optimistic sign that capital markets are returning. But look at the fixed income trading. Back in the days when I was trading in the pits in Chicago, we always took notice of what Goldman was doing in trading. They were up almost 20%, beating expectations. And their asset management was up nearly 30%. So I think it's going to make new highs. Hang on to Goldman Sachs.
Stocks.
I met a guy not that long ago. He was telling me all these crazy stories. He used to be a trader in the pit back in the day for Goldman Sachs, actually. And so, he was down there. He was down there in the pits, baby. Yeah, that's old school financial markets.
Food, still.
Super
Micro. It's had a huge run, and it's going to join the NASDAQ 100 next Monday, replacing Walgreens Boots. Jeff, what about it?
Well, Joe, nice to see your handsome face midday here. I thought you'd be on the back nine. But yeah, Super Micro down about 25% year to date. I think you take some profits here. This is like a baby NVIDIA. If you look at where it started the year, Joe, it was trading about $285. So to see this parabolic move, I think you take some profits. But you never want to short a name like this. You can take it out in a body bag.
All right, let's move along to the final name, which is Ulta Beauty. They've got several price target cuts last week. Oppenheimer.
Sir, with what we have going on in our country, that's not a good choice of words there. No.
Moved it from its top pick list. This had been one of the second.
By the way, Super Micro, that's a crazy one, man. I think that one has some insane P ratio on it. Let's see, Super Micro Computer. No, it doesn't actually. Trailing 12 month of 49, that's not bad. I mean, you look at NVIDIA, that's wild. You know, NVIDIA's at a trailing 12 month of 74. What? I'd be flipping my flapjacks. That's actually interesting. I expected their trailing 12 month P to be something really, really crazy. Wow.
Winners of the 2010s, Jeff Kilberg. What happens to it during the 20s?
You know, it's fascinating to see it's breaking its 200-day moving average. I want to be a buyer here, though, but I want to use options to establish this exposure. I just looked at the 395 puts going out 1 month, Kelly. You can collect about $11 on that. So I think it makes sense to sell puts here versus buying it because it wants to back and fill that $375 level, but I like it. It's the best of breed, and they make a lot of money with high margins.
Oh, my gosh. Ulta down another 4%? We're going to do this live. I'm going to add this to my potential buys watch list. You want to see my potential buys watch list? It's a big one, man. It's a big one. You know, and when it comes to potential buys watch list, it's like, it's a potential buy. It doesn't mean I'm for sure buying it by any stretch of the imagination. But it's like stocks I'm kind of keeping in track of, companies I like, that I'm like, might make a move on that one. But Ulta Beauty, oof. You know, down about 18, 19%. I mean, for Ulta, that's no bueno. I mean, Ulta is usually a stock that just does phenomenal year after year after year. Let's see where their valuation's at here in regards to Ulta Beauty. I'm going to guess not very high as far as a forward P on this baby. Let's see, Ulta, wow. Yeah, but keep in mind, Ulta's a retailer, so they should trade lower as far as valuation goes. Is it one of the most well-run retailers in the world? Sure. But it's a retailer. So they should trade at a little bit of a lower forward P. So, yeah, okay.
Jeff Kilberg, thank you very much. We appreciate your time.
In regards to Ulta, I mean, a great company, obviously, over time. Like I said, one of the most well-run retailers. But my question is, would I rather have Ulta now or would I rather have Estee Lauder, right? And have a direct play on kind of more high-end cosmetics. I mean, I might lean a little bit more toward, if I was to start a position in either Ulta or EL, I might go EL. I like the fact that they own the brands, right? I like the fact that they don't have to compete with Amazon. Ulta has to compete with Amazon long term, right? And I just don't like that kind of setup, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Appreciate y'all joining me. 1000xstocks.com. I'll put that as a pinned comment down there if you want to apply to have access to 1000xstocks.com. I'll put that as a pinned comment today, or you can go to www.1000xstocks.com. We also have we have conference calls on this baby. We have SEC filings now on here. We have the compare feature where you can compare 3 stocks versus each other. Ooh, it's absolutely beautiful. Much love and have a great day.